So now that we've explained why gains are subtracted and losses are added, we're going to talk about analyzing changes to current assets and current liabilities. We've already talked about changes in current assets and current liabilities belong in the operating activity section. But now we're going to talk in detail about, do we add those changes or do we subtract those changes? And the first one we're going to talk about is when a current asset decreases. So here's the rule. If a current asset decreases, then add the difference to the operating activity section of the statement of cash flows. And we're going to explain why. So on the left side of the screen, we have a partial balance sheet of Mary's Mowing Service. It's showing just the assets. So we need to analyze the first non-cash current asset. And we need to figure out, did it increase or decrease from February to March? So notice February is in the right column, March is in the left column. So it looks like AR went from $500 to $400, so AR decreased by $100. So what event would cause Mary's AR to decrease? Well, if Mary's AR decreased, then her customers must have paid off some of the AR. And if customers are paying off some of the AR, which way did cash go? So Mary's cash must have increased by $100 as those customers paid off $100 of AR. So since her cash increased, we must add the difference to the operating section of the statement of cash flows. So we've now added the operating section of the statement of cash flows to the right side of the screen. So we're going to create that section, and we're going to assume net income is $670. The operating activity section begins with net income because it's going to approximately be pretty close to the net cash provided by operating activities. And so what do we do with this $100 decrease in AR? Well, we said if AR decreased, then cash must have gone up, so we have to add that $100. So this company's net cash provided by operating activities is $770. So that's our first rule. If current asset decreases, then add the difference. So we've just explained this first rule, decrease in current assets means you're going to add that. Now, realize that this decrease in current asset rule applies to all current assets. So we just analyze AR, so let's analyze inventory. Inventory is actually the easiest one to analyze for most students. If our inventory decreased, then what must have happened? Well, we must have sold the inventory. So if we're selling the inventory, which way did cash go? Cash went up. So as you can see, our rule applies to all current assets other than cash. Now you might be thinking to yourself, what if we sold that inventory on account? Well, don't worry about that, because if we sold it on account, then AR is affected. And then we will also include an analysis of AR. So don't worry about that.